Welcome everyone to today's video in which we're going to talk about Uber stock because they reported earnings and the stock is down 3.7%, although at one moment the stock was down almost 9%. They reported some very good earnings with 20% revenue growth, which was mainly fueled by the food delivery segment. Now they also reported 22% year-over-year growth in quarterly trips and gross bookings grew 22% year-over-year. They also recorded quarterly GAAP income from operations of $1.8 billion and quarterly operating cash flow at an all-time high of $2.9 billion and free cash flow of $2.8 billion. Overall, they reported some very solid earnings, and the CEO said Uber accelerated into another record-breaking quarter. So everything was great. In terms of these earnings, the stock was down almost 9% at one point because the mobility segment came in below expectations, but overall that doesn't justify the 9% drop. The reason the stock fell almost 9% is probably due that the overall tech market is getting hit right now. Microsoft down 13% in the past week, Nvidia down 8%, Palantir down 12%, and other big tech players. But like I always say, earnings are just one quarter and we always have to take a look at the broader view of the company. Uber is a company that is up 31% in the past 5 years, that now has a market cap of $156 billion. They are generating $52 billion in revenue and they are keep growing. And P/E ratio is currently at 15, although we'll talk later about the valuation with a discounted cash flow model. And analysts have them rated as a strong buy with 44% upside. And also let's take a deeper look at their financials, starting with revenue, which has seen tremendous growth in the past 10 years, growing from $3.8 billion to $52 billion today. Now, obviously they have a drop during COVID, but I wouldn't take this into account. And Uber is a fast-growing company. Especially in the last couple of years, they have grown revenue at high double digit, which is amazing. Now, analysts are still expecting tons of revenue growth. As you can see here, revenue is expected to go from $61 billion this year to $92 billion, so still double-digit or high single-digit revenue growth. Their profit has also seen very good growth. This used to be an unprofitable company in 2022, and they are now generating $10 billion in net income. They also have basically the same amount of free cash flow, currently at $9.7 billion. The reason they have seen this amount of growth in terms of profit is because they have very good margins. Gross margin is currently at 34%, profit margin at 19%, and free cash flow margin at 18%. Now, if we take a look at analyst estimates in terms of profit, I don't know why they have profit basically the same in the next 5 years. I completely disagree with analysts. Now, it is true that only 3 analysts are covering this stock in 2030, but because they have such good margins, I believe profit is just going to continue to grow. Another positive about Uber is that they have a good balance sheet with $7.6 billion in cash and only $12 billion in debt, which, as we've seen before, is very manageable for a company that has a market cap of $155 billion. And I believe Uber is a company that is well positioned in the future. For example, for the autonomous driving, they recently made a deal with Nvidia, which is going to target 100,000 vehicles and supported by a joint AI data factory built on the Nvidia Cosmos platform starting in 2027. And Uber is a well-diversified company. Although mobility came in slightly below expectations, it currently represents $29 billion of their revenue and is going to continue to grow. And as you can see, they also have the delivery segment, which came in ahead of expectations and is also going to continue to grow. Now, if we take a look at the revenue by geography, Uber is known in the whole world. As you can see, US and Canada, Europe, Middle East and Africa, Asia Pacific, and Latin America. So they still have a lot of opportunity in other countries that are not the US. For example, the US and Canada segment, which represents $25 billion of their revenue, is growing at mid-double-digit growth. However, the Europe, Middle East, and Africa, as you can see, is growing almost at 30% in the past couple of years. Very quickly, before we go into the valuation, if you want access to stockanalysis.com, which is where I've shown all the data in this video, you have my code in the description. Now, let's take a look at the valuation. In order to determine the intrinsic value of the company, I use the discounted cash flow model. This tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And as you can see, the intrinsic value according to my low assumptions is $80 per share, middle $115 per share, and high $163 per share. Now, because the stock is currently trading at $75 per share, this means that if my low assumptions occur, you would get an 11% annual return on your money, middle 18%, and high 24.7%. And I believe my assumptions are reasonable as I have Uber growing revenue between 7 and 13% annually for the next 7 years, averaging a profit margin and free cash flow margin between 16 and 20%, and I assigned the PM price to free cash flow at the end of the 7 years of 17, 19, and 21. But if you want to make your own assumptions, I'm going to leave a link to a spreadsheet down below. Super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. And in conclusion, I believe Uber is a fantastic company that has a moat. It's going to keep growing in the upcoming years, and I believe it is undervalued at the moment. And therefore, I believe it's a good time to start to position in Uber at $75 per share, although I'm probably going to wait until it falls at around 70. Now, if you own any companies at the moment, I want you to say that the market is currently very overvalued. If we take a look at the Schiller PE, it's 40, almost the same level as the dot-com bubble. Now, this doesn't mean you shouldn't buy any stocks, but be prepared for stocks to fall in price even more. Now, as value investors, this is great as stocks would get cheaper. And what I'm currently doing is dollar cost average in the stocks I own as they fall in price, such as PayPal and Adobe. And now I'm probably going to start a position in Uber recently. I hope you found this video valuable. Let me know what you think about Uber stock earnings in the comments, and I'll see you in the next one.